How's everyone doing today? Shankar P.I. here, and today we're going to talk about cryptocurrencies and where it's going to be heading, up, down, or sideways. Now, please remember, I'm not a financial advisor, and all this information that I'm telling you today on the YouTube is just for entertainment purposes only. So without further ado, please remember to like, comment, subscribe, and share if you find these videos entertaining and informative. And as well, without further ado, let's dive into the charts. All right, guys, so I just wanted to talk today. So this is an article I brought up. It's from 2019. And the reason I'm bringing it up is because today the Fed has raised their rates by 0.25%, so 25 basis points. And it's been spooking the market. Some people are concerned. I mean, the news already came out and the market's pumping because they were, 0.25% isn't that much. But I'm bringing this news up was in 2019, reflecting on the 2017 Bitcoin increase in price. So that bull run, the 2017 bull run. So the title is, did the Federal Reserve interest rate hike boost the price of Bitcoin? So if we look down here, so normally when you have a lot of interest rate hikes, it's harder to the cost of borrowing is more expensive. And because there's a lot of leverage and margin in legacy markets and the stock market, people will not be pumping as much money into the market because they'll be closing margin, their positions, their leverage positions and margin positions, because it costs more to maintain those levels. I mean, those loans. So that's why a lot of people are nervous of what's happening. But during the 2017 bull market, so we look down here, it says correlation with interest rates. In today's analysis, we believe there's a positive correlation between the Federal Reserve's recent decision to raise interest rates by 2.5%. So that's a 10x than what we've raised our interest rates now. So we've raised our interest rates 0.25%. And in 2017, the interest rates rose by 2.5%, and the Bitcoin price jumped back from 32K, jumped back to 4K from 32K. So the price increased $800 in the time right after interest rates moved up 2.5%. So I just want to bring this article to your attention, and that interest rates going up and down is not a crazy concern, especially 0.25% is not extremely crazy. It's nothing to really get too frazzled over or too concerned. If we keep raising interest rates, and let's say we're projected for the next rate hike to be 0.25%, but then we raise it to 2%, the discrepancy in the difference of the rate hike would be the cause for concern, because the market wouldn't have priced that in, and then you'd have a massive drop in price. So let's go here to the fear and greed index. So I want to bring this up. So this is lookintobitcoin.com. So it shows us the fear and greed index and where we are currently in the fear and greed. So I like looking at this chart because it shows, gives you a visual of what the fear and greed looks like as we move up and down the chart. So anytime we're down here, so the score is 8 or 9, 14, 17, here at 17, even here at in the summer lows of last year, we were at 24. Normally when you're that low, we have a price increase. So there's a lot more risk not buying here than buying here. Anytime you're high into the greed, the risk of buying in these areas where it shows greed is high. So the risk is high. So right now we're on the fear and greed index. If you look at this visual chart, we're reading a 24, which is very low. And if we're comparing it to the 2019, the crash of last year, the summer 2021 crash, we reached a score of actually 13%, 13 out of 100 when Bitcoin was 35K. So, and here we were at 19 out of 100. So yeah, that was extremely low. So the lowest before that was in the 2019 crash, which was 11. Before that, after that's the COVID crash, which was 5, and then we got all the way down to 13. So, the risk of us going down a lot lower, I believe, is very low. So I just looking at this, and I like to show you guys a visual chart, because then you can kind of see and get a nice perspective of the fear and greed chart and where we possibly are. So the next thing that we're going to look at today is, so this is Glassnode. This is the Bitcoin total transfer volume. So it's just showing the transfer volumes of people who, want Bitcoin versus don't want Bitcoin. So you can see here that at the peak of the market in 2017 December, the volume of people who don't want Bitcoin, so their people are selling their Bitcoin because they no longer want Bitcoin. They're in a bear market. We think we're in a bear market, so nobody wanted to touch Bitcoin at all during these times. And before that, so over here, right before, or right actually at the run of the 2020 run, we had an increase of volume. So we had people who were buying Bitcoin, and then we had an extreme increase in price. And as the price was going up, people were selling their bags, right? Of course. And currently, so the reason why I don't think we're going much lower is because currently we're still increasing people who want Bitcoin. So we're increasing the volume of individuals who want Bitcoin. So a lot of people think that, hey, we're in a bear market now, where this is similar to 2018. But in 2018, nobody wanted to touch Bitcoin at all. No one was looking at it. No one really cared about it during that time. Or if you see over here, the metrics, this metric is way different. People are wanting Bitcoin, and we're close to, passing this high here in last year's summer. So you got to keep that in mind that, we're having some chop, but just because we're having chop doesn't mean we're going to be mimicking 2018 and have another 50% drop. All right. The next chart. So, wow. While I was recording, I had this set up. I guess it broke over while I was. So, this is the Bitcoin chart, guys. How we looking? We're looking all right. So we have this key zone right here has acted as support and resistance since beginning of 2021, January 2021, and currently, if we go zoom in, we've actually we're broken above it right now. So we were in this channel. We broke above it. So let's see if we currently have, actually, as I'm looking at this now, we have a bearish divergence right here. So we may come back down to actually, maybe retest this and then break. But the key thing I want you guys to pay attention to is this bigger picture. So we need to break this right here. So right now it's about, if we were gonna break it today, it would be about 44 and a half. So 44K, about 44.5K is what we need to break. So this yellow trend line that has been the trend line from last year's summer, we need to break this for me to confidently say, okay, the bull run is back on. We're living. We can call Forbes. So let's say we made it. All right, so again, so this is the Bitcoin chart, but this is mapping out the Wyckoff accumulation schematic that we have. So we've been following this for a couple months now, and we're still looking good. We're making higher lows. We do need to make a higher high, though. We haven't made this higher high yet, so we need to start making higher highs, or this will, if we do come in, like I said, make a low, it'd be invalidated. We need to start making higher highs and then break above. So that is what we're looking at here. The Wyckoff accumulation schematic is still in play. It's looking good. So we should be in our ascension soon. And if we look here, if we zoom in here, if we look at the volume, so look at this candle that we broke out of this. I guess I'll go to the hour time frame first. So you can see this sloping line here, that is a trend line, and when we broke it, so let me zoom in onto the 15-minute. When we broke it, we had massive volume coming here on the 15-minute, and when we dumped, we didn't really have that much volume compared to the buying volume. And if we look to the right, so if we look this way, all the volume, the bigger volumes except for this candle here, and this was the the inflation when they announced that they're going to be increasing inflation by 0.25%. But all the other candles, the buying volume is a lot higher, and the selling volume, it just looks like people are just taking profits. So it looks fine on my end. The volume profile looks alright to me. But yes, we do have to break the $44,500 mark for us to say, hey, we're back in business. And we're still in this wedge pattern. So if you look here, we're still in this wedge pattern. So this is valid. We've had touches here, we've had a touch here, we had a fake out, a touch here, came back in the pattern, and then we've had, you know what, let me go, yeah, okay, there we go. Yeah, I had this on the daily. Okay, there we go. That's why this is more accurate now. Yeah, so it was on the daily time frame. So we had these touches, and on the top we've had a touch here, as well as here. So if we can break this, retest, you know, I will be very confident that we'll be breaking $44,500, right? So we're still in this pattern, nothing to fear. The day-to-day price action may wear you out, but you know, nothing really much has been happening. We've literally just been getting tighter and tighter in this pattern, you know. So you might have gotten chopped out of the market if you're trading. I've been actually substantially lowering my leverage on these altcoins and keeping my stops a little tighter. And yeah, so you know, you gotta do what you gotta do if you're trading these alts. So let's look over here on the weekly time frame, guys. You know how much I like the weekly time frame. So we can see here, and what we look for on the weekly time frame again is the NVT. So the NVT currently, it's showing we're still bullish, guys. We're still bullish. Everything's looking fine. There's nothing to even for me, there's nothing to worry about. We're looking good on the NVT. We still have upward momentum on the stochastic RSI, so let's see how high that can take us. Yeah, so everything's looking good. Realistically, I have more bullish cases than bearish at the moment. We're still maintaining higher highs and higher lows. So if you look here, this is a high, this is definitely a higher high, this is a low, this is definitely a higher low. And if we pull this out, if you think this was a double top, so let's say you think this was a double top, so a lot of people think this was a double top, especially I think it looks like that on the monthly time frame. So let's say you thought this was a double top. It's still in a bullish pattern here, right? So this is still a bullish pattern that has a higher probability of breaking to the upside, all right? And if you thought it was higher highs and higher lows, then this is an upward channel right here. Mind you, these channels, this is considered a bear flag. So if we bounce up here, we can, you know, assume that we may make it all the way up here, right? But if we come down again, you know, there is that probability that we break to the downside. So on this test, we will be anticipating a break to the upside, maybe a retest and continuation. For us to get that upward momentum. But if we go up here and come back down, there could be a high probability that we go further down, which I'm not anticipating, but we need to see both sides of the trade, right? So as much as this is an upward channel, it's also considered a bear flag that has a higher probability of breaking to the downside. All right, guys. So that's all for today. I hope you enjoyed. Please remember to like, comment, subscribe, and stay level-headed. You know, the price action on a day-to-day basis can be a bit stressful, especially if you're new. But at the end of the day, Bitcoin trends upwards over time. And if you can, you know, understand some TA and just build your mental strength and fortitude, you'll make it. We're all gonna make it. All right. So enjoy your day, and don't forget to like, share, subscribe, comment, like, share, subscribe, and comment, and subscribe, and like, and share. Thank you.